Welcome to Cutting Through the Noise. I'm your host, David Siegel. Each week I game the system to bring you new ideas for a brighter future. Today my guest is Lex Sokolin, an entrepreneur, analyst, writer, and keen observer of the decentralized finance movement. Welcome to Lex Sokolin. Thank you for joining us on the show.
Happy to be here.
Lex is an expert on, I would say, the decentralized future, especially finance. And I want to hear from you, what your vision or version of DeFi is and where you think we're going with it.
Sure. It's a dangerous thing to say that I'm an expert in DeFi. There are a lot of people who are building the software and making a lot of progress, so I'll certainly cede that label to them. I think I'm more of an enthusiast for it because I think there are elements of DeFi that are just so unique and different that if you're a futurist or you care about FinTech or you care about crypto, then you just have to cheerlead it because it's really the best kind of brick through the window that we have in financial services. And so here's let's define what DeFi is.
Yeah.
Right? Today, it's an ecosystem, mostly on Ethereum, which allows you to access different types of financial services that would traditionally be offered by a financial institution, whether that's a bank, whether that's lending, whether that's payments or investments.
Insurance?
Insurance, there are some things are in the works, but nothing kind of has gotten very popular
So
yet.
that's not really in the main.
Yeah.
Okay.
So I would, if you wanted to really look at DeFi projects, today the popular ones are around lending. So you put the collateral of some crypto you own and you get a stable coin back and you get to do things with it, or maybe you get interest on your crypto that you've put in, things of that nature. But then you also have other DeFi projects that do, for example, automated trading and rebalancing.
Okay.
You have, of course...
Yeah. And this is with no central computer control. This is all through smart contracts that have to execute and no middleman.
Yes. So these different product categories in which you have different verticals, from asset management, making a product, to trading, to lending, to, if you want to say Bitcoin as payments or some other currency as payments, theoretically you also have decentralized organizations for payments as well in the ecosystem. So you have these different pieces, they've come online at different times, and the key that unites all of them for me is that you get a financial product, but it's not manufactured by an organization. So there's no kind of credit risk on the other side. There is hacker risk and custody, key risk and all that cyber stuff, but there's no traditional credit underwriting counterparty risk.
Third-party counterpartying risk.
Yes.
There may be credit risk, whoever's on the other side of the smart contract.
Yes, 100%.
But no third-party risk.
Yes. So there, you're still making decisions that are financial decisions related to capital and the quality of the product, but in terms of manufacturing the product itself, you are not required to use a trusted third party. It's the network itself. Now, today, this is small and it's easy to deride and find holes in kind of the economics of how it works, but it's the only existential threat to what the financial industry does on the manufacturing side that I've come across.
To Wall Street.
To Wall Street, regional banks, small community banks, big payment processing companies, all that stuff, anywhere. It's a threat to the actual capital product, not like how you get customers, but how you manufacture the product itself.
Right. Okay. Let's go through some use cases. All right. So this is really a P2P world, would you say? Without intermediaries.
Sure.
Right. If you think of a investment bank sort of being between hedge funds and buyers of products, things like that, structured products and so forth, it's really just P2P. It's just more direct.
And the longer term, the P doesn't have to be a person. The P can be Goldman Sachs itself.
Sure. Right. But without the intermediaries. So let's go through some use cases, and I keep hearing about lending, And I keep wondering, and I've written about this, that you put up some Ether or some Bitcoin, someone borrows that or borrows the resulting stablecoin. What do they do with it? How are they profiting from? Because if they can't profit from it, there's got to be some risk on the other side of that.
Yeah.
What's the key use case there? What's a typical use case?
So I don't think I can motivate that very well for you right now. What I can say is that today in the crypto world, speculation and the financialization of the different currencies and assets is the number one use case. So people want to borrow a currency to short it, and they'll pay for that, right?
Sure.
So kind of margin is probably the biggest reason somebody would want it.
Right, margin.
Which isn't great for the asset that you're putting into.
Well, they may short something else, maybe. I don't know.
They may want to have a portfolio and they don't want to get the underlying. But it's a financial use case.
Yeah. Right. And I'm a big believer in shorting, because I think shorting evens out markets so that that we don't get lopsided, one-sided markets that don't have the other people, the whistleblower is able to put their own money up to.
Well, also, this is an intermediate step, right? So today's lending DAOs it's not that they're boring, but there's no underwriting in them, really. You put collateral in, and that has some market value, and if there's a fluctuation of the market value, that triggers the thing to get the money back. But there's no intelligence in the risk that you're lending towards, right? So you're not assessing some business so they can take a loan and then build things out. You're just saying, this Ether is worth this much, and we're going to hold it and give you an equivalent of a stable coin. So that's kind of prehistoric lending, right? I give you a gold bar.
That's right.
I give you a gold bar, you give me some dollars.
Exactly. There's no credit involved. It's all hard cash.
But once
hard money lending.
Yes. And you can make the argument, though, that you teach people to borrow and to lend on crypto assets, and then you can start putting digital lending underwriting models into it, where you actually collect external data and you're assessing business risk, and it's more mature.
Right.
And then you get out of this hole of it's only short trading.
Yeah, sure. What about CFDs, contracts for difference? That's not legal in the United States.
Yes.
They are legal here. They kind of make sense to me. Is that a use case here in Europe?
Again, it kind of, for me, the financial speculation stuff is, it's not the least interesting, but it's not the economic use of the asset. Okay. It doesn't create productivity and growth in a little economy that moves forward necessarily. It gets you, the more financial speculation you have, the more financial tools you have to speculate. It sort of doesn't grow up anything other than that. There's a project called Abra, which is started out as a crypto wallet, and then added trading, and then added CFDs around traditional, I believe it's traditional equities and funds and things like that. So you can have a wallet or a neobank or a robo-advisor, which gives you the impression that you're actually exposed to all these asset classes across different types of markets. So that's interesting, but I think it's kind of, it's not necessarily DeFi. You're going to Abra to give you the service.
Right. What about DEXs, decentralized exchanges?
Yes.
We have a lot of exchanges out there, most of whom are doing a lot of wash trading.
Yes.
Right? On cryptos. What problem does a decentralized exchange solve?
Am I supposed to take the bullish case? Is that okay? So I guess you can think of a DEX maybe in some ways a dark pool.
Okay.
So
assuming then that all the large exchanges are somehow light pools.
Well, the problem with there are many problems with today's centralized exchanges, and outside of whatever philosophical bent you have to motivate your DEX preference, a lot of the exchanges, no, it's not right. Some of the exchanges behave as broker-dealers.
In what way? They take positions?
Yeah, they take prop trading positions.
Oh, okay.
So they expose their own capital, and then they have information about who's trading, and they have OTC.
Mostly OTC, that's not necessarily inside the, is that true also inside the exchange?
You'd have to look at that New York Attorney General deep dive.
Yeah,
so
it said something like 90% of all trades are fake trading.
Yeah.
And so you think that the exchanges are just generating that all by themselves to move their volume numbers and attract customers?
So there's these are two kind of separate issues. The first is in the SEC application to build out an ETF, VanEck and Bitwise submitted their documents, and they were public documents, and the Bitwise one is spectacular.
It's amazing, and I will put a link to it in the description of the video.
It's really good. Props to that team for putting it together. And so the volume on most exchanges, 95% of the volume is fake. Now you would think, this is somehow an exception or shocking, but it's not. Actually,
the normal
everything is fake. Everything is fake. The internet, 60% of the internet is fake. All of Trump's followers are fake. Actually, 60% of Trump's followers are fake.
And my 35 YouTube subscribers are real. I just want you to know that.
Fair enough. So that's high, and the reason it's this way is people are manufacturing the impression that they're important.
Yeah. Okay.
So that's problem number one, which is, it's not innocent because the numbers are misleading, but it's not taking advantage of information for your own proprietary
Okay, that's problem number one.
Yes. Problem number two is exchanges are running prop desks.
Yes. Are we talking about the margins, the spreads that's the problem? If I want to just trade in a marketplace, what do I care? I really care about the price and the spread.
You'd have to look at the right. So where I was going is that the New York Attorney General looked at something like 5 to 10 exchanges and looked in detail at some of the information asymmetry issues that the exchanges had. Right. So again, I can't be precise about this just because I don't remember. But it's you're facilitating trading on one side of the business, and you're saying you're giving people best execution or best price,
right?
And then on the other side of the business, you're using that information for your advantage inside the trading. Again, I can't be more precise than that.
Right. So that's one part, but another part of it is that the decentralized exchanges do eliminate the middleman, and that's something a lot of people like, right? That is a true DeFi solution.
Yeah, so I really like the idea of DEXs, and I think today the issue with them is that the spreads are really bad relative to centralized exchanges. And the reason is centralized exchanges have network effects. So the more buyers and sellers you have in a centralized order book, you end up
not enough scale.
Yeah.
But now, when they have a margin that isn't a spread that isn't good, is it the decentralized exchange that's taking that, or is it actually the other person on the other side of the trade? When you have this margin, is that like a profit a fee to run the DEX somehow, and then it's the DEX token holders or something that benefit, or?
Can't say. I think there is a cost of running the network, but I don't think it's a profit margin motivated one. So I don't think it scales up and down depending on the
for example, in the case of Binance DEX, I think it's obviously they just want their coin, the Binance coin, to be used as the gas for everything, right? I guess they don't mind if margins thin out a lot, go way down, because they just want lots and lots of volume. Right? So that's not a bad model, right? That naturally encourages those margins to come down.
And you don't have to use the coin to pay. You can use it for various toys, right? So you can use it for being first to access an offering. If you have enough of a coin, you can be the first to buy in an IEO or something like that, or You can get the trading discount and the referral stuff. So you do the growth hacking with your coin, things like that. So they're super smart. They're executing really well. But I think if you kind of zoom back out to the decentralized finance ecosystem, like you have these very nascent point solutions within each product, whether it's trading like you mentioned, or the lending piece, or the DAO for venture, which I'm sure people will try again and again. And
it will be a security again and again. At least in the United States. Sure. Now we're going to need a stable coin, a real one, to make this work, aren't we?
What do you think?
I think we're in trouble. Yeah, because I think that the DAI people have shot themselves in the face with a 19.5% in and out fee annually. Annual 19. That's higher than the credit card charges we were trying to avoid here. So I think that's bad. And while they could undo that any time, it's clear to me that the game between the DAI community, the people who actually hold the maker token, let's call them the investors, because I think it's an investment contract, which has its own implications on the regulatory side that people don't talk about much. But let's say the makers and the people who create DAI, I don't know what's the name of that process. There's a name, creating DAI, and I think there's an opposing set of forces that forces the maker people to keep hiking these fees, and at the expense of the people who want the stable coin. And so I don't see that ecosystem as functional. What's your take?
I think these are early experiments, and what they point to is demand.
Yes.
So that's as far as I can really I can really put a flag in the ground is demand, which for a startup is super hard to find a pocket of real demand.
Yeah, sure.
So the fact that you have these volumes tells a story about what people want. In the same way, during the ICO boom, the numbers told you a story about people really want to raise money and are prevented from it. Forget how and what and the pieces, but the demand is there.
And people wanted to invest.
Yes.
Yeah, $20 billion worth. That's a real signal.
Yeah, for sure. So you derive the lesson from that, and the same for the people. There's a set of people who are crypto native and who hold a lot of crypto assets. Yeah. Right. They need to do something with that, either putting that into an early stage project, or whether trying to get an interest rate off of it, or trying to get a stable coin out of it so they can maybe purchase something. I don't know. Maybe
or sit on the sidelines and sit out some volatility, or they'd also like to go to fiat.
Maybe they don't want to take the risk anymore. Fair enough. Yeah. But there's pent up demand in that pool of the population for just the transformation of the asset they have. So
we have almost 3 billion in Tether at the peak until recent bad news. But there's definitely demand.
I'm not too worked up about the fact that this one particular machine is broken in this one particular way in the short term, or I don't think it tells you very much other than this permutation of it isn't maybe going to get there, or maybe this governance model is not getting there. For me, stablecoins, I have a broader issue with the stablecoins. I think once a stablecoin is big enough to break, it'll get broken. The peg.
The peg.
Yeah. If it's important enough that it's profitable for somebody with a bigger wallet to go and break it, they'll break it.
It depends how it's collateralized. I'll do a separate thing on stablecoins. I just was wondering if you have a crystal ball and could make a few side bets on any particular stablecoin projects you like, or see that might be. Do you like Reserve?
I'm not in the project picking game. I'll say it this way.
Shoot.
I'll say it this way.
Curses.
I like stablecoins that. I like the financial instrument more than the payment instrument. So the idea of a stablecoin as a cash sweep inside of an exchange or a brokerage or as some sort of settlement instrument or as a cash sweep, right? So,
but we have that with centralized exchanges right now. We have Poloniex dollars. We have, you can always go to dollars inside the exchange. You can't send them to anybody else. But you can sweep into dollars.
You could do that, in Coinbase, but not in Binance.
Yes. Inside, I don't know about Binance.
You go into Tether in Binance.
Oh, I see.
Right.
In Poloniex dollars, they just give you an IOU. You can't send that to anybody, but at least you can sweep out and sit on the sidelines if you want it, and you expect it won't go away. Yeah. Most of these exchanges, Gemini, they have their own, dollar.
Yeah. And I
so
think
that's already a reasonably valuable product.
Yeah, for sure. And if you look at that product, if you look at the traditional brokerages and custodians, the money market fund or the cash sweep is, it's been a while since I looked at it, but somewhere between 5 and 10 trillion. Money market funds. So that is for sure undeniably a meaningful use case, right? When you're getting to the place of transforming a crypto asset into a stable coin you can use to pay for stuff. I think that's a much harder game, and
much
people
harder,
haven't proven that.
A lot because of regulations. Because if it's seen as money, if it's redeemable for $1, then it will be seen as an e-dollar, and it will need all those e-money licenses and banking requirements. So very difficult. What else can you see as we need to fill in for this DeFi ecosystem to come into existence?
I think there's just a lot of boring connections to make.
Plumbing?
Yeah. So human beings at least in my experience, I don't think they care about financial products unless they are forced at some particular point to deal with it. So you have a life event and you need a mortgage, or you're retiring and you need to get your pension, right? Generally people don't like financial products. It makes them feel bad. And so getting somebody to open up a savings account is hard. Getting somebody to open up like a MakerDAO contract and figuring all of it out to use is the barrier to entry is incredible. So I think packaging what's available into a coherent and easy, not a story, but an offering that's really seamless and fits into like financial planning or the goals that people actually have. I want to buy a home, I want to go on vacation, I want to retire, I need to refinance my student loans, the sort of actual needs and life events that people have, rather than, hey, it's super cool.
Here's this cool thing,
here's like, it's right now, people are driving their regular gasoline cars manually, but they're buying transport. They're getting to the place where they want, and we have a bunch of super cool, super smart people that are making engines and self-driving AIs, and the engine is not what anyone's going to really get into.
That's right.
So you need all the wrapping around it.
Right. So now you've written a lot about robo trading and bots, and so getting the humans out of the system. They weren't very good. Anyway, my last guest said that Goldman Sachs did a review of their customers' accounts and found out that the ones who outperformed were the ones who had died, who had just not managed anything actively in years, and they really crushed the active. So in your view, how do bots fit into a world of smart contracts and decentralized products?
So this is a story of kind of fintech to crypto in my mind. So a lot of what fintech has done over the last decade is taken distribution and automated it. So the front of the store, the customer relationship, right? All of that lives in here. So it used to live in a branch. It used to live with a human being that you interact with, which is a compliance nightmare, right? So if you're a financial advisor, you sell me a pie chart and asset allocation, and then someone else is a financial advisor, they'll send me a different one, and then yours happens to be full of proprietary Morgan Stanley product. The SEC is going to fine you and fine Morgan Stanley and all that stuff. So robots are great at being standard, at being potentially better fiduciaries, and then delivering that to you in your phone. And then you can also have hybrid models where robots do the work, but then the human creates the empathy and the storytelling and sort of control. And realistically, that's where things are landing, is this sort of hybrid human-machine thing.
Okay.
And that's true for banking and wealth and trading and all of that.
So now how do smart contracts fit into that?
So that's the distribution piece. Now that distribution piece plugs into traditional investment firms or traditional banks. So I think we're in this place where we need to figure out how to take the front end, which is the Robinhoods and the Revoluts and everybody who's got the customers, SoFi. And on the other hand...
SoFi, social finance?
Social finance,
right.
Okay. On the other hand, look at these decentralized finance manufactured products and figure out how to connect them into that interface. Because from a customer point of view, I mean, you don't really care if
it's too complicated.
You don't know BlackRock small cap from MakerDAO. Like, you just don't.
Right. You don't know how to pay the gas fee. You don't know.
You don't want to touch that.
Yeah. And furthermore, people don't understand that how committal it is. How are you going to get out? Usually you want to get out of it. You're like, okay, can you unwind that?
Well, it's clap on. That's how it. To give you just one more step into that, right? The other players aren't the traditional manufacturers of financial product. They are Google, Amazon, and financial and Apple, right? News just broke that Apple's coming out with a crypto kit, the way they have their AR kit. We know that Samsung's got a whole bunch of crypto phones coming out as well that will store your keys. We know that Facebook is building a stable coin for payments across WhatsApp, whether or not it's crypto or stable, it doesn't matter. But the point is, the large tech firms are coming in through messaging and payments the way Alibaba did it.
True.
So now the ones that own the hardware also own all your keys, potentially. Well, you do.
Or they help you own your keys.
Yes, exactly. So then maybe for them to get into manufacturing financial product, which they don't want to do, they don't want to be associated from a regulatory perspective.
Well, that's true. Regulatory.
So Apple's credit card is powered by Goldman, for example. But if you have these decentralized networks, which are, let's say, they find a way to actually be functional. It could be super interesting for the Facebook or the Google Pay app to plug into that and enable that as well, because for them, they don't care about. They don't want people to have a bad experience, but they don't necessarily care whether the product is traditional banking or whether it's some equivalent that's more technology forward.
They want to see the same familiar interface on the phone. Basically, right? And they don't want to be subject to dangers. You didn't know to back up your key before your phone went in the lake? Oh, geez, I'm really sorry for you because you're now screwed.
I hope that wasn't $2 million on that.
They need a lot more handling than that. So walk me through a line of thought that I've been struggling a bit with. Because last year we had crypto winter, where everything died, and everybody who was trying to raise money for anything couldn't all of a sudden, and then the regulators and things got very cold, and so everyone switched magically from it's not blockchain, it's blockchain plus AI now. We've put the peanut butter and the jelly together, and this is the magic solution. Blockchain plus AI. You hear that everywhere. There was just an infographic on LinkedIn about the top blockchain plus AI and the landscape and all this. What is the there for you, and how does that relate to these bots and these? What can you see coming down the line? Because I see it coming very slowly. AI feeding into smart contracts and having that stuff actually work.
Yeah, this is like the Thanos Infinity Gauntlet, so you got like blockchain,
exactly.
You got AI,
right, what's next?
Virtual reality.
Right. Keep adding buzzwords until you get your funding.
Edge computing.
Keep adding buzzwords until you get funded.
And then once you have them all, I'm not gonna confuse my Lord of the Rings with my Infinity Gauntlet. Okay, so there is a compelling fairy tale that lots of people like to tell, which is the Internet of Things and the billions of devices out there. There's now, I think, 3 times as many connected devices as there are human beings. Right. So And that's growing exponentially.
Yeah.
Devices get made faster than people reproduce.
Yeah.
Generally speaking, I mean, not for most people.
Well.
So the story is you have tons and tons of devices. They need to speak to each other and be somehow interoperable, but they're strangers. They're not owned by the same company.
Right.
So when strangers communicate, you need some sort of protocol.
They could be malicious.
For sure.
Yeah.
Some very malicious. You know about the baby monitor botnet?
Yes, you've told me these stories of these evil botnets and the refrigerator botnet.
Well, the baby monitor, if you have a baby monitor that has Wi-Fi in it, it's probably part of a botnet that is trying to take down websites.
It's probably a secret agent.
It's very easy. There was a 15,000 baby monitor botnet the other day.
No, so seriously,
anyway, okay.
How do we get out of this buzzword trap and find the real stuff?
So I think there is a real story about if you want to put things on the cloud or on a blockchain for whatever business case, you will need AI to transcribe human documents or to structure visual information, et cetera, et cetera. So there's things to pitch, and it's a new Lego piece, and I believe that. How do you find real stuff now? It's the same it's always been, which is, can you do something better, cheaper, and can you sell it? Finding pockets of customer demand is the only way to do it.
Well, what might be those first use cases that do get a bit of like, there's so much demand and people are just crawling over themselves to find a real solution?
Well,
would it be robo advising, for example? Is that?
No.
Okay.
I mean, so blockchain and AI, if you look at that, they address different parts of the value chain.
Yes.
So artificial intelligence does a lot for user interaction. So it's the new customer-facing thing, right? It profiles you, it can talk to you, it can take your information, so that's very much like a salesperson.
Right.
There's a whole bunch in the middle office around taking unstructured data and making decisions about it quickly.
Yes.
Is this payment fake or not? That kind of stuff.
Right. Correlating risks in portfolios, so forth.
Yeah. And then at the very bottom, it's used for manufacturing the financial product, but where you need judgment. So like what I was saying about one day you're going to have a DAO that does digital lending but underwrites. You can outsource that to the crowd, or you can take the crowd's opinion, run that as an experiment, and then teach a machine to replicate the judgment of that crowd in that particular way, right? So AI is about human judgment. It's about an intuition, replicating a probabilistic intuition. Blockchain is totally not that. It's the very bottom layer of how the data is stored. It's the infrastructure.
Exactly.
So, where would they connect? It's wherever you do have digital objects that need to have some judgment attached to them, which, that underwriting case or the investment case or the trading case.
A lending market might be an example. You might want to put money into a lending market, but do it in a smart way, so you're diversified. So you might want to hand that to a bot, and the loans could end up being blockchain-based, smart contracts.
Yeah, for sure. I think the work around oracles or around prediction markets.
And oracles where you feed data into smart contracts from some external source. Yeah.
It can come from humans. It can come from machine learning on human data.
Yeah.
I think the biggest hole is manufacturing the product. So doing the investment selection or figuring out how to trade in the most effective way, or figuring out how to underwrite the loan and doing the business risk and making that assessment.
Right, so you see these as quite separate, and if you can make an AI-based product that's good and you could sell it through, Charles Schwab, then you could hook it up to some friendly interface that gives people autonomy and smart contracts.
Yeah, so like if I'm creating some sort of app that has Google Maps in it and then the ability to chat, I might integrate Google Maps and I might integrate, another some chatbot. I use Microsoft's out of the box,
whatever.
And in the same way, when I'm making a decision about these things, I'd say, okay, which public or private blockchain do I want, and then which AI
solution,
toolkit do I want.
Right. Okay.
I'll give you one more just personal cool one, which is
bonus.
So I'm a visual artist, and I like visual arts.
That's right.
And there's like this massive renaissance in artificial intelligence visual arts. Unbelievable stuff.
Yes.
So the
generative antagonistic networks.
Adversarial, yes.
Adversarial networks.
So if you look at what Dali did in the beginning of the 20th century, these machines are doing now.
Yeah.
At scale.
Right.
I mean, they're hallucinating objects. So the way that the way that GAN works is that you have one neural network that's been trained on, let's say, dogs. So it makes dogs.
Yes, and there's a famous dog GAN. So yeah.
And then there's another network which is the critic. It's the nasty, the person who says, all this food's disgusting. I hate
that's not such a good painting.
That's a terrible dog.
Right.
So this one edits this one.
Right. And they train on separate sets, and they're completely.
And after a while, they kind of bump against each other. And today, you can have photorealistic manufactured faces, dogs, whatever it is.
That's right.
But the cool thing isn't, I made a dog that you've never seen before. So the cool thing is not that you can make a dog, but that you've got a dog over here, you've got a cat over here, and then maybe over here you have like an exploding volcano. Right?
Okay.
And so now you want to move between these images in what's called the latent space, which is a mathematical concept for the different variables that compose these underlying images.
Okay.
And then you can travel, from one place to the other. So your dog might have 2/3 volcano in it, right? So that generates the Dali image. And so there's just been this massive renaissance of stuff you've never seen.
Clocks and elephants.
Clocks and elephants.
Giraffes.
Anything you want.
Right.
And so now you have a machine artist, which is of course built by a human, but which can generate an infinite number of interesting things.
Right.
But they're not, they're digital, so they're not unique in the way that a physical object is unique.
Right.
So this is where blockchain comes in. Blockchain can make digital objects scarce. So
right.
You're traversing this latent space. Thousands of things are nonsense, but you found 3 that are spectacularly beautiful, and they just tug at you.
Just if I can make it clear, if you have kind of a slider between a clock and a giraffe, then you can, one can move the slider and say, is that art? And the judge says yes or no. And you do that about 6 billion times over the course of a few hours, and at some point you come up with something where the judge says, hey, yeah,
that's beautiful.
That's beautiful. That's awesome.
Yeah.
And that is something that can be then turned into a work of art that can be tokenized.
So then you go and you say, let's take this, put it into some sort of collectible wrapper or into a token. There's a couple of projects, Kriya, and a few others that are creating these sort of like Behances for on the blockchain.
Yeah.
So that's an application of AI and blockchain, which is unique, super interesting.
Right.
Commercial possibility for this market's probably $10.
Invest now in the Dali app and the Dali algorithm.
But it's at least super cool.
Is there a Kurt Schwitters? A Kurt Schwitters algorithm?
They're all that.
Okay.
They're all that.
Elizitsky? I'll take that. Okay, last question because I want to wrap up. Permissionless finance, and this is if you watch enough Andreas Antonopoulos, you kind of get sucked into this world where you can just move money at will and no authority is going to come after you, and it's anonymous and amazing things happen, but that's not the world we live in. But do you see what's your take on permissionless finance? Is it going to be a niche thing that's actually going to have some value over in some corner? Is it an idea? Is it something that may have some influence?
Oh boy, I mean, I'm curious where you start answering this question, right? Because it goes to what is it that we trade off in order to live in the society that we do? Like, what is the social contract?
Yeah.
For me personally, I'm a pretty big fan of the social contract.
Okay.
My family immigrated out of the Soviet Union when it fell into the U.S. I benefited from...
It didn't fall into the U.S. They emigrated into the U.S.
Yes, and then it fell. And actually, this is a separate topic, but the Soviet Union fell in a super capitalist way, in a way that China did not. So the sort of hyper-libertarian anything goes in the USSR resulted essentially in warlords taking control of public resources, which is not a great permissionless future, right? So, and the social contract in the US gave me public education, which end of the day let me start my company and all these good things. So being subject to a jurisdiction, I'm not ready to say is bad. I'm just not. I'm ready to say that friction is bad, and giving people the ability to improve their lives, and especially in jurisdictions which are cruel or exploitative, and you can objectively measure this. I don't have to come up with, we don't have to come up with a philosophical argument. There are indices for which jurisdictions have which kinds of freedoms. For sure, there's transformative power from having access to finance, period. For the unbanked to be self-banked. Transformative power. But I definitely don't take the tack that, let's burn everything down and all sorts of, because let's take another cut at it. Like, what is law, right? Law is not some prison imposed on us. Law is the conclusion of human process that arises out of conflict resolution. We have conflict, we come to an answer, often through the courts, and then that answer becomes the law. So the law is all of the edge cases that humans have gone through in history. They're all the answers that we have. And it can be co-opted and lobbied and all these bad things, but end of the day, I don't want to say that doing anything unrestricted is in some way better than adhering or saying, I respect these set of laws and I want to partake in them.
One thing that's clear is that things have to change in some way. So right now, if you own Bitcoin, where's the Bitcoin? Right? No one knows where most of these assets are if they're on 10,000 computers around the world. What jurisdiction applies to the asset? And we keep making laws that are knee-jerk reactions to the problems of yesteryear to make sure that politicians look tough on crime and they can get reelected. So I'm willing to go with about 20% of your argument. I'm always afraid of the 80% that's holding us back, and it's anachronistic.
So I think about the media industry in this context a lot, and so one story you can tell is BitTorrent and Popcorn Time have won. Right? You can tell that story.
That's how you get your movies.
You can say music and video are totally free, and people can get them anywhere, anytime, and it's impossible for governments to stamp out. And this is true. At the very same time, Netflix and Spotify have never had a better business.
That's right.
So just because the content is free doesn't mean that you don't have a business around it. So it's still much more convenient to go to Netflix than try to run Popcorn Time. Just because you can't do it on an iPad. It's still, people still feel better paying something for the experience than even taking it for free. Like, there's a psychic disconnect. So I was looking at like DRM, because in my mind DRM never worked. And recently there's been an argument
digital rights management.
So people would, break, CDs wouldn't work in your DVD player because they're from Asia and you're the thing. But all music streaming is DRM. So DRM has had a resurgence in the last 5 to 10 years because people now don't pirate and save MP3s. They just... You're saying Netflix is the DRM? Netflix or Spotify, that's the DRM. That's the new DRM. And it's so invisible and easy that people love it, and it's it took 15 years to get to a place where the combination of the jurisdiction and the law combined with the sort of liberation and the piracy or like peer-to-peer movement to create something that people actually like. And so right now, to me, feels kind of like 2002, 2003, or when the music labels are suing teenagers for having music on their computer that they've stolen. And the labels are saying, we're going to hire the best DRM consultants to lock down our DVDs. There's a good 10 years to get to permissionless finance that actually fits together with everything else.
But that then really kind of caused the new all-you-can-eat subscription model that works for masses, right?
Yes.
So people don't mind it.
Now, and this is why DeFi is so important, because DeFi makes finance free. The cost of manufacturing in DeFi, if done at the extreme, which is all the economics are right, all the contracts are non-hackable.
We've built those muscles.
All of the sort of things you need to move things in and out work. In the extreme, that means the manufacturing of financial product costs nothing at all.
Yeah, the cost comes to zero.
Nothing.
That's right.
Right. So then you
scales wonderfully.
Yeah. So then you get the Spotify of finance, and that's entirely new.
Awesome. That leads to the 4 phases of tokenization, which I'm going to talk about in another video. Lex, great speaking with you. Thank you so much.
My pleasure. Check out GAN Breeder. That's the
GAN Breeder. Look out. It's a new world, and we're going to follow Lex as he moves on to exciting new frontiers in decentralized finance. If you'd like to see more videos like this, please subscribe to our channel. Come to our website for a daily dose of reality. Become a member of our online community and join us here each week for another insightful interview from Cutting Through the Noise.